Good morning, good afternoon, good evening, wherever you are joining us from. We are grateful that you have chosen to spend the next 45 minutes to an hour with us as we discuss inflation and what you can do about it. This was meant to be our September CIO monthly review. Unfortunately, our CIO is unable to join us tonight. I'm sure that a lot of you are familiar with the rolling blackouts and load shedding that's happening across South Africa, and he has unfortunately been hit by that. So we will get him online with you as soon as we possibly can and get his insights into inflation. But we are ever grateful that we have got James Paynter from Dynamic Forex Solutions, who has been a long-standing partner with Wealth Migrate and the Global Wealth Group for over 12 years, actually. And he has joined us tonight to share his wisdom. As you know, every time we have James on a webinar, we have sold out attendances. So James, thank you for making yourself available and joining us today. It is really great to have you online.
My pleasure, Lee. To be back with you again. Yeah.
Thank you,
See what we
James.
can do for everyone tonight.
I'm sure you're going to add massive value as always. We look forward to your insights. And then, of course, we've got Scott Picken, founder and CEO of Wealth Migrate, who's also going to be sharing some of his knowledge and putting James in the hot seat and asking him all the necessary questions. So I also wanted to just let you know some housekeeping. We have got the chat box and the Q&A box activated. Please can I ask you to post comments in the chat box, and as far as possible, post your questions in the Q&A box. It just means that we don't have to keep tabs on the chat box and note where people have asked questions. We can actually just see your questions and make sure that we get them to James. So without further ado, let me hand over to Scott.
Brilliant. Thanks very much, Lee, and wonderful to have everyone online. We are lucky tonight because James was going to be a special guest anyway, so now he's the main guest. So really appreciate you being here, James, in terms of our chat. And I think what's interesting for me, just to start off with, is that we're talking tonight about inflation, and you'd be hard pressed if you're following the news not to kind of like see inflation literally everywhere. So I literally Googled inflation, and this is what came up in terms of the news, all the way through here. Inflation. Then I did kind of inflation in the UK. You can see UK shops hit record highs. UK shop inflation speeds up again. Cost of living. When I was in the UK in August, this is all they were talking about, and they were talking about how energy prices had gone up 18%. So there's a lot of kind of talk here around the UK and what's happening. Then, if you go to the US, there's an inflation reduction bill that came out literally, in the last 24 hours or so. I don't know, James, I asked you about this because I'm not up to speed yet on what this bill's all about, but you had a bit of a comment as to what it's all about.
I said it's probably everything to do about anything else but reducing inflation. So you're not going to be reducing inflation by having a huge spending bill, that's for sure. That's exactly what has driven inflation up here, is massive spending, government spending, and so on. So and so most of it is probably going to places where it shouldn't be. So I can't say I've got any good comments to make about that bill at all.
Yeah, no, fair enough.
Government keeps out of things that actually be for the best.
Sorry, I didn't hear what you said there.
I say if the government keeps out of things, it will probably be for the best.
Yeah.
Then
that's
drive inflation up, not reduce it.
The one thing we didn't mention is James is actually coming live from America. So when I ask him questions of what's happening on the ground, he's got better insights than necessarily I do. Then if you look here in Europe, very similar kind of story all the way through with regards to Europe. Inflation nearing 10%. In terms of Europe, this is a devastating one. McDonald's could be impacted by inflation. I saw the humor in that, basically. And then even if you go to Australia, Australia, interesting enough, was the most resilient economy in the G20 in the last crash, so 2008, 2009. And it's just interesting here what they're talking about here in Australia and the different points with regards to it. So I think what we wanted to do tonight was, there was one article that I wanted to share here, and this was an article I found that literally was posted yesterday around protecting your wealth from extended high inflation. It's written here in South Africa. And what's quite important is they talk about why inflation. I think we all kind of know what's happening here, and will they get it under control? And they talk about two things. They talk about the soft landing and they talk about the hard landing. And they basically say that, under a soft landing, it's where the central banks kind of put up interest rates and they don't dramatically crater the entire economy. And the hard landing is where they put up interest rates and the economy goes into a severe recession. So, it's kind of the soft landing and the hard landing. And they then go on to say, well, depending on whether it's going to be the soft landing or the hard landing, people don't actually know. And so if you look here, it's more important for investors to spread their bets during these times and not be all in one, potential economic outcome. So, we talk a lot about diversification. In fact, we've actually got a webinar tomorrow night on specifically diversification. And it's really important. If you're interested, just type in their diversification and we can send you the details. But they go on to then talk about, what equities to look at and which equities are better, compared to the soft landing versus the hard landing. And do you go into the kind of quality or do you go into the kind of high growth assets? Then it talks about fixed income and what's actually happening in the fixed income period. And again, the impact that inflation has on fixed income. The one thing I think that's quite important here is that they talk about inflation has actually been quite good in terms of, because you're buying into the future cash flows, okay? But you need to be careful because of the relationship, in terms of the long term. Same thing with the income here. While we remain underweight in both asset classes following the recent interest rate hike, we've started to add duration to our portfolio. So, they're worried about interest rates rising because they're vulnerable. Commodities, providing a good protection against inflation. And then they talk about gold. And finally, the part that I think is important here, if you're South African, is, they actually literally, I found it quite interesting here. What did they say here? Furthermore, the inflation environment, that investors should invest surplus of their assets offshore and retain locally only what is required to fund their lifestyle. So I just, it's quite an interesting concept. I did find this interesting, this article, because there's no mention of other alternative assets like property, commercial property, etc. And one of the things, and we, as Lee said, we'll redo the session with Rion, where Rion and I and Lee had prepared for it, was to talk about the fact that actually property is one of the best inflationary hedges, because the price of property is in relation, it goes up. And I know, James, we're going to have a conversation about this just now, but traditionally, statistically, it goes up, and including incomes go up because they generally hedge to inflation, which means that it's, resilient. And what I find really interesting at the moment is if you take people with $30 million, so net asset value of $30 million plus, more than 50% of their portfolio weightings has actually gone into alternative assets. Okay, so we're seeing large capital flows, according to the research that we're doing, going into alternative assets for the reasons that it effectively hedges against inflation and it protects wealth effectively. So it doesn't necessarily create wealth, but it's quite a good way to protect wealth. So, James, I'd love to kind of open up the conversation. And before we even go to inflation, I think one of the things that is very relevant, and we just started in the conversation a little bit earlier, was you gave our wealth hackers insight about 2 months ago. I seem to remember it was July. And you gave us some insight into where the world was going. You gave us some insight into not only currencies, but commodities and even the stock market, etc. And one of the things that you were talking about was, would it be worthwhile going and reviewing some of that information and seeing how we've tracked based on the last 2 months? Because I'm a big believer that if we want to look forward, let's look backwards and see how accurate that's been, because it provides substance to be able to look forward. So are you comfortable for us to kind of review that?
I'm happy to do that, yeah. It's always interesting to look back and see that, we have an outlook based on the various methodologies we use, but to go back and see how those have panned out. So what should we just share our screen this side?
Yeah,
Yes,
please, if you can. Yeah, that'd be great.
It is a little bit disconcerting looking at ourselves on the screen.
Yeah.
Is that better?
We've got it. Thank you, James.
Okay, so I should just go straight to.
And again, for our wealth hackers, they can go and watch this full recording. We're not going to go through all the details, but what I think is fascinating is some of the forecasts and kind of where we are. What is it? End of July, so it's August, September, so it's 2 months later.
Yeah, so starting with stock markets, I think these were historical ones from our previous webinar 2 years ago, but this was this year, and we said the market had probably topped out and sitting at 31 at that point in time, and our cycle analysis had also suggested the market had topped out. And I think what we said at that point in time, that we're expecting the market to rise a bit over the next month or two, and then for it to collapse. So just what we'd shown at that point in time, you can see how that's basically what we saw the market push up into 34 or so thousand. This is Dow Jones, end of August, and since then we've seen a new low. And the fact that we've seen a low below this low here in June is a confirmation that we are definitely heading further down. So yeah, that's confirmation to us that our analysis, at least in this sort of let's say medium term, is this is what we're expecting, minimum down to 18, and next level probably 6.5, 82%. So that's pointing to a very deep recession going forward. Commodities, we looked at gold at that point, with gold at that 1,800, and we said at that point in time we're expecting it to get down to the 1690 to 1575 area. If you look at that, you can see that's pretty much what's happened. We've actually touched the last week or so 1617, so we come right down into that area there now. And we actually are at quite some critical levels at the moment as to whether that's going to extend further, or whether we'll hold above this 1555 or head even lower. So gold has been coming off as we had looked there. So here we had also said our cycle analysis with expecting a low coming into September sort of area, which has now happened. Silver was pretty much, just look at silver. We said we expected a move down into this sort of band. And
Is this silver you're showing us now? The one that you got on the graph?
yeah, this is silver, and you can see here now we've actually came below our, oh no, we haven't. No, I had this band here now. But we're expecting down into the 18 or sort of 19 to 1650 area. And we've seen it hit 1750 or so. So that is silver. But also this was looking for bottoming out, in this sort of time period, this quarter. So the next couple of weeks will be interesting. Interesting one, yeah, was oil. When you're talking about inflation, a huge factor there is the oil price that's driven up inflation during this period here. But if you look at oil the last couple of months, see where we're looking for that to sitting at over 100, 103 back then. And we're expecting to move down into the 85 to 65 area, which if it's about
So let's just say,
76.
let's just look at that quickly. So oil is currently, I'm just trying to read your charts. We're currently in the
81 yeah.
area. You're saying it's going to go to where?
Well, it's come down into this this 85 to 65 area that we had shown back in July. But an interesting one, I mean, I haven't actually done an analysis since, but this was looking for like a bottoming out sort of now, September, and perhaps a retracement before possibly heading lower. So, we could see a bottoming out somewhere and then up and further down, but I'd need to do some further analysis on that to confirm.
But I mean, that's quite a good sign. I mean, on the assumption we're having a conversation around inflation,
yeah,
that's quite a good sign that the major energy cost is going in the opposite direction.
Yeah, and this, of course, this filters through to inflation, in pricing and everything. So inflation has got a lagging effect in terms of the oil price, feeding through. So I think we'll still feel the benefits of these, possibly the last month feeding through into inflation.
Okay, well, that's good to know.
Forex markets, interesting one, the dollar. I mean, we've seen the dollar push right up to that upper target level, and I think a little bit beyond the past week. And that's one of the Wealth Hacker global forecast views. Yeah, so it's just pushed through there, but we can see it's come down quite sharply today. And our outlook is we are still expecting a topping out in this area. So I think we had here some of our cycle analysis here showed that had likely rolled over. It's extended a bit beyond idealized in terms of time, but we are still expecting that long-term trend to have rolled, to be in the process of rolling over. And once we get that, we should see a substantial a weakening of the dollar in over the coming couple of years at least. So we had pushed this down to here, but probably looking at down to the 90 sort of area as a first target. Euro the same, you're looking for bottoming out there in the 95, above 95. I think we may have seen, yeah, so testing the bottom side of that target area there, but also looking for our analysis is still looking for bottoming out in this area. I mean, whether we just spark below it or not, I think in the next week or two we'd have some confirmation of whether we've actually seen a reversal in these major markets. And of course, another one which I don't know whether we covered here was the pound, which we had expected to hold above that 114 area. But I'm sure you've seen what has happened to that, Scott, is that
well, I mean, pound's fallen out of bed.
Yeah.
Primarily, I mean, there's actually an article here which I can share with people around. It's basically their huge reduction in tax.
What is that in relation to?
So with regards to the pound devaluing massively over the last couple of days,
yes,
it's mainly because of the big tax incentives that the UK government's brought in.
Okay. Well, economists always look for reasons, but they can't actually tell you why the markets move. Just throwing that in there. So, yeah, what we do is look at cycles, and what this is telling us. We'd expected that we'd had let's just actually put it here, from here, this point at the top, back in 2007, that we'd had a 1, 2, 3, 4, 5 as being the final low at this point. So just to get this here, as we are showing here, 3, 4, 5. But what has actually happened is this was actually showing this should be 4, 5 here in terms of this, and this is an ending pattern. So this is sparked down below, these lows here. But in terms of this, as well as our cycle analysis, we are looking for that to bottom out as well. Together, when the rand, when the dollar peaks, we should see that the reversal on the pound, which could well have happened already. When you get these points of like extreme, all sorts of sentiment now in relation to that. Very often, that is when you've got to the end of that trend. So that's it on that one. I don't know if Aussie dollar, I think we were looking for it to bottom out above, what, 63 or so. You can see that as, yeah, so we've hit about 63.80. So we haven't seen a new low on the Aussie dollar, which is telling, as being one of the majors, that it looks like the Aussie dollar bottomed out back in 2 years ago, which we thought the pound did, but it hasn't. But this is in a correction. Once we see this complete, we should see the Aussie then rise against the dollar. The rand, dollar rand, we were looking for it to head up into this area just below 17 to 1763 is idealized target, with a close above there, like a weekly or 2-weekly close above there, invalidating that. And what with the dollar pushing up, we've actually seen that pushing above that target area. Pushing quite strongly above that, but with the reversal that we've seen on the dollar, if we come back into that target area, it probably means that this pattern here has just extended a bit beyond idealized targets, but is then, if we come back into that, we should be confirmation that we are then heading lower, which again would coincide with the dollar itself peaking. Okay, that's a short term, which was.
I wanted to look at the. You also mentioned well, there's two other ones I want to look at. One was cryptocurrency. I can see it's coming up, and the other one was that you showed real estate.
Yeah, so cryptocurrency. What we're showing at that point in time was, okay, so a medium long term. That was back in 2020. Yeah, so as long as we held above this 13,880 level, that we'd still be heading higher on crypto. And we're expecting either a final dip or that we had bottomed out at that 17,592 area, with our cycle analysis showing a similar thing. What we've seen there is on Bitcoin, is that we came out of that target area, but effectively we kind of dipped back down, and it could be that we could still be seeing, a final push lower here before we see a final top. But we haven't broken below that low that we saw back in June. So our overall picture is still, as we forecast back then, but we might see a final spike down into, towards that 13,880 level. But we should then see a big push higher. And one thing I did want to show there was Ether, which is second, one of the big ones, that it looks like on Ether that we saw an impulsive move up, which normally shows a change of trend back in June. And since then, it looks like a nice corrective pattern coming down here, which would seem to confirm that we overall in a bottoming out period, with this one having bottomed out already, and Bitcoin possibly having bottomed out, but perhaps having a last thrust lower. So we're still expecting a bottoming out there the next month or two before pushing higher. We did cover Ether, yes. And then you're looking at real estate. Back then we said our cycle analysis was looking for topping out in pricing.
Just to be clear, when we're talking real estate, we're talking residential real estate here. Is that correct, or is it general?
Residential, correct. Yeah.
Yeah.
And then also we had new housing starts. Here, and then we just go and have a look at what we had there. And here. So this is new one-family houses, houses sold in the US, and it's a slightly different one to this one. But you can see it's similar sort of picture. And we can see since the last couple of months, we've actually come down sharply on this, the new family houses sold. Interestingly enough, if we do an analysis on that in cycle analysis, we get a similar picture to this. We could do it one here. So we can see that kind of ties in with this one here, that we should see that extend. The next low that we're looking at is somewhere like mid-2024 in terms of that bottoming out. But a very interesting picture, Scott, is if we actually take this to the front. No, sorry. If we take these two and put them together, that these shaded areas here are recessions.
Hang on, we lost you. We lost your diagram. We lost your diagram, and I don't know where it's gone. Yeah, there. Yeah. The shaded areas are.
These gray areas here are US recessions.
Okay, got you.
Okay, and if we look at this pink line here, which is a composite cycle of all these cycles here at the top, that basically we are getting these showing points of these lows, showing when we're getting in, when we can expect recessions. So this low here in 1983 or so, again in around 1990, again in 2000 and around 2001, 2000 and when was it, 9 or so, 8 or 9. But that the next one that's we got here is that low coming up 2024. So I mean, this is pointing to, you know, the fact that we could see a recession going through for the next, 18 months or so. But also that housing sales, we should see that continuing down for the next year at least. Another one that I wanted to show was was monthly supply of new houses. So like the inventory of new houses, we can see back in 2000 to 2008, that shot up and up and up and up and up. But at this peak here, we entered a recession, and that's what we heading into here. And interestingly, we've had quite a peak at this point here. So, that's also pointing to the fact every time we had a peak, we entered into a recession. Here. Yeah, so that's I think that's basically what we covered on that side. Well,
could you, James, you spoke to, I'm conscious of the time, and I've got some questions. Yeah. There's some questions in the chat box, and I know that we're going to pivot into the Zoom room for the wealth hackers, but a question for me, you mentioned there was some stuff on the CPI and stuff that you'd been looking at around inflation, and just for everyone, I thought maybe we can kind of go there and see what you were thinking.
Okay. What I did just looked at here was find it here. Well, I just had time to look at the US CPI, which you can see as just jumped here the last couple of years, and then put that through our cycle analysis tool. And what that is showing us is screen. Is if we look at the dominant cycles that have been running back from the 1960s through to today, and you can see how nicely they've correlated in the past with peaks and troughs. You must understand one thing is that these are timing cycles and it's actual pricing projections, but just in terms of time. And they might lag by a little bit or lead by a little bit, but what we are seeing here is that this is pointing to the fact that inflation is peaking, and we should see that coming down into the 2020 again 2024 sort of area as being our next low. So it might we might run out a little bit or so, but what our analysis is showing is that inflation is actually, for the moment, has likely topped out.
Okay. So amongst all the doom and gloom, there's some good news.
Well, that is the interesting thing, Scott, and is the one of the indicators we look for is when a market's about to peak, is that everyone's doom and gloom in relation to it. Either doom and gloom or euphoric, that it can only continue further, or it can only further up or further down. But often at that point in time is when it's actually due for a major reversal. So the fact that inflation is all over the news is one of the indicators. Once it reaches front page news, normally that means that the trend is over.
So, James, there's a number of questions here. And as I said, I'm conscious of the time on the 45 minutes, but we're going to go and kind of do the analysis. I know that Mari and a few other people posted in there, Peter as well, Cabello, and said, what does this mean, etc. And again, we're going to talk to that now, but just in terms of your take on inflation, like you see it sort of peaking. I mean, I presume if you see it peaking, that means interest rates will start to level out as well, because there's no incentive for the government or the Reserve Bank to put up interest rates if inflation is going sideways or down. What is your take on kind of, and I know this is not financial advice, so please, I'm putting that out there, but just based on your understanding of the markets and stuff, what is your thinking at the moment for the next, I don't know, 6 to 12 months?
Well, one thing, if you look at what's happening in the stock markets, they're normally a leading indicator of the social mood, and that's definitely now confirmed. We're heading into a major correction, and what that will mean is feeding into the economy is that we're heading then into a major recession. And if that happens, that what we will see is inflation like turning. I see inflation turning over, and we could even end it up in a point where there's stagflation, but then down to deflation. The longer that recession continues, the more we will likely head into that sort of deflationary spiral instead of inflation. But that should affect interest rates as well. So now we could head a bit higher in the short term in interest rates, but ultimately I can't see them pushing them too much higher, because you're going to be doing some serious damage to an economy, global economy that's actually battling at the moment. If you look at the amount of debt, total debt, which I think we covered 2 months ago, you start pushing interest rates on top of that, you're going to see a massive collapse in debt, which ultimately needs to happen, but I think we're heading more for a hard crash at the moment with what they're doing.
Okay. So let's look here, because Lee, I'm conscious of time around pivoting, but there's a couple of questions that I think we should just try and answer. So Peter, Kagiso, there will be a recording for the Wealth Hackers. Peter has said, what does this mean for investments? And Mari said, she's lost, etc. So the whole idea of what we're trying to achieve tonight is that we're going about it in 2 different ways. So one is that with Rio and myself, like we were going to then discuss like the different markets and what we do, and then we were going to look at James in terms of where the markets are going, etc. As it's turned out, it's probably actually the better way around, because now we're going through the markets and what's happening, etc. Now we can take that and we can say, okay, cool. Well, what does this mean for investments, and what do we do in terms of our investments, etc. I do think one of the things that give people peace of mind is that we do a lot of macroeconomic analysis, and like things like making sure when we invest, we're investing in future-proof sectors, we're investing in cities and countries, and then cities, and with partners that have stood the test of time. And I think these things become really, really important. Where Maury says, is that housing peak in terms of new buildings? So yes, Maury, what he was sharing was new buildings. So there were 2 things he shared. One was housing sales, and the other one was housing, new buildings that are coming. So effectively, one is supply and one is demand, in terms of the 2 sides, and both of them have been leading indicators. And remembering that it's one of the reasons why when you hear me, I talk a lot about the value chain of real estate. If you're dealing in sort of houses and apartments, then this becomes relevant. If you're dealing in commercial property, then it's not relevant, because it's driven by other factors in terms of that. And even if you're dealing in multifamily, where you're dealing with multiple beds, multiple tenants, but you own 200 to 300 units, they have different driving dynamics. But what I think is very, very important is that James is showing us not so much. He's giving us an idea of kind of where economies are going based on cycles, if that makes sense. Sorry, it's very slow on my side. I don't know if that's me or am I like freezing as well for everyone else?
No, you're coming through loud and clear, Scott.
Okay. In terms of bucks, he was asking about inflation in Japan. I don't know, James, if you've got any numbers on that. I'd have to go and Google it. I don't know. I don't know Japan off the top of my head.
James, you are muted. If you could unmute yourself and maybe you could stop sharing.
Japan, I mean, I know Japan has been in a deflationary period for the last couple of decades, but I haven't actually looked at it for probably the past year or so, as to whether it's come out of that. I'd need to have a look.
There's a question here, and I'm going to take 3 more questions, and then I'm going to kind of bounce into the wealth hackers because it becomes relevant. And I do want to share, there's a quick question before I go to the other questions. So Peter asked, where do we get this information? So as part of the wealth hackers, you basically on a monthly basis get a condensed report where you can literally go and read about, so this was posted a week ago by James. And it's in our Wealth Hacker Global Forecast Markets report, so they come out monthly. And you can basically go and you can look at what is happening in terms of the dollar, where's the dollar going, and there's a short description. So for those of you that kind of get overwhelmed by too much information, it's great to be able to kind of just get a short-term overview. If you're wanting to look at the euro dollar, then we'll, and by the way, we're gonna talk to these just now in the Wealth Hacker group, but it sits there, and then you can even see the Bitcoin to dollar. So it just gives people kind of the overview, and then for those people in South Africa, if you kind of got the dollar rand overview, and it just gives a light overview around the markets and what is kind of happening in terms of where the markets are going. But as investors, these things do become important because they do impact decisions over the longer term, which I think is quite key. So Peter, I hope that answers your question. The last 2 questions, and then we're going to pivot to the other room, James. And if you don't mind, we can go into the Q&A like we planned, and we can also talk, to the value add that the wealth hackers get and the difference that the masterminders get. But there's 2 last questions. One is from Hans, and he said, "Hello, James. In your opinion on the euro, I'm familiar with Elliott Wave and also a customer of yours. Is the bullish scenario now finally over? And how useful do you think the chart analysis is with so many fundamental extreme events? Does it currently make sense to look beyond 6 months? Central banks, war, energy crisis, destroyed every analysis in a few days."
Yeah, very interesting question. One thing with it learned in forecasting markets is that there are events, there are fundamentals which can affect things over the long term, but in the medium term, what drives the markets is human sentiment. And often you will get major events at key turning points, key turning points in cycles, and that's because human sentiment is at an extreme, and they can affect what all those events are human driven events, whether it's by central bankers or governments or whatever. They're all caused by the same humans that are involved in those markets, in Forex markets. So you often see those major events happening at a point of extreme in that market. And so in terms of like the euro and dollar and so on, to us, it's actually confirmation that we are in a major, we've reached a major trend cycle end on a lot of those major markets, because of what's happening that we're seeing in the world is merely confirmation. So it's not to me that the two things are unrelated. They're actually very much related. But at key points, we will see major economic and financial events, and even political and social events at those extremes, because emotions are at an extreme.
The last question was from Alex, and he said, in your opinion, how do you see fiat currency versus cryptocurrency performing in the next 3 to 5 years with the current trend of Web3 technology coming to market adoption, etc.?
Yeah, for myself, I see that there will be a drive. Fiat currency has, I think it's come to the end of its day pretty much, and we're going to head back towards to currencies backed by gold or other precious metals and so on. Interesting enough, I mean, already we're seeing that happening with Russia. The ruble's gone back to being backed by gold, and I think that might be a trend that's going to continue forward. And whether then that is put together with a cryptocurrency, I mean, I see that happening, that we, will get away from actually paper money, but perhaps some cryptocurrencies that are actually backed by actual money, with the precious metals.
This was a chart that I was shared, which I think is really interesting. And here you've got the beginning of the Ukrainian war, etc. And then this is the ruble to the US dollar. And then they backed it by gold, and it's literally just risen against the dollar, which is really interesting when you consider they're technically enemy number one around the world. They're having a war, but the bottom line is, it's, as I understand it, the only currency that's actually performed against the US dollar over the last 3-4 months, and that's because it's pegged against gold. Yeah,
I see that being a trend going forward. I mean, effectively, Russia said we're not taking fiat currency anymore because it's worthless.
So James, we had a comment from Andrew, and he said, hey, look, this is all great, but I don't fully understand it all, and I don't know how to implement it. So what I'd like to do now is that we plan to pivot into kind of a private conversation with our wealth hackers and our masterminders. And what we're basically going to do is we're going to close out this room. The wealth hackers and the masterminders have all been sent a link. And if you haven't, just ask again on the WhatsApp group or whatever. And what I'd like to do is we're going to run through this forecast that you've got, and just kind of the high level of what it means, what people can do, how it impacts their investments, etc. And then, as you and I shared, we've got an extra gift for the masterminders that we want to talk through. But I think that's probably everything. If there's more Q&As or questions, if you're a masterminder, then please just bring it. Sorry, Lee, for some reason it's now suddenly not opening up on my side. But my request is that those questions, I can't copy the questions through. So please make sure that you've got your questions and can bring them to the next room. We are going to change from a webinar to a Zoom room for the wealth hacker community. To those of you not wealth hackers, it's been wonderful having you online. I hope you enjoyed the analysis. I know that it can be confusing. I understand that. I've been working with James for 12 years. If you want to read my book, just type in their book, and chapter 2 of the book, Property Going Global, James actually wrote for me, and he explains all about how it works, how human sentiment works, how you can analyze and track the trends. And I don't think the evergreen part of how that works has changed. So if you want the book, just plug it in here, and we can send you a copy of the book. But Lee, back to you. I think to sort of say cheers to everyone here, and we need to pivot into the Zoom room.
Yeah, thank you very much, Scott. Thank you, James, for what you have shared with our greater community. It really is appreciated. We look forward to seeing you in the meeting room on the other side of this to share with our wealth hackers and our masterminders. To everyone who mentioned that they would like to know the details of Diversification 5.0, we will be reaching out to you with personalized emails about that. That is taking place tomorrow, 5 p.m. GMT, 6 p.m. UK, 7 p.m. South African Standard Time. But we will send you the details on how you can join us tomorrow evening as well. I reiterate what Scott has said for the wealth hackers and masterminders. If you do not have your personal invitation link for the meeting that's happening now, please just reach out on the groups and we will get that through to you. And to those that have joined us this evening, thank you very much for spending the last hour with us. We really do value you. We value your questions and your interactions, and we look forward to seeing you on our next one. Goodbye, everybody. Take care.
Cheers, everyone.